Hello, good morning. This is Sanmi Adeagbo. Yesterday the market closed, and I was not able to do any analysis before the end of the week, so I decided to show you some of my watch list and then to tell you what I intend to do in the coming weeks, what I expect the market to do, and then what our reaction is expected to be as an Elliott Wave analyst. The one on my screen right now is the GBP yen, and could see the end of a long-term trend here. Then after the end of this, which was actually completed by an ending diagonal, we saw price moved down, okay, in what looks like a typical impulse wave, and then with this labeling, the third wave has already ended here. 1 2 3. So what we are seeing here could probably be the fourth wave, okay, the correction. And now we expect this correction to be a zigzag or a double zigzag, okay, because the first leg here is actually a 5 wave structure, which I'm going to show you quickly in the 1 hour chart. So the zigzag here is going to be A, B, C. Okay, so we don't expect the fourth wave to go too deep here, because the second wave went considerably deep, so we don't expect the fourth to also to go to this level, to the fourth wave here. So it could just be A, B, maybe 61.8 or 100% extension of this one from here. So that could be enough for the fourth before we see price coming down again. So how do we take advantage of this information? Going to the 1 hour chart. In the 1 hour chart, we could see that. Let me zoom it. Okay. All right. So in the 1 hour chart, let me remove all this first. Let me remove all this so that you can see it clearly. All right. Now on the 1 hour chart, this is the first leg of the expected zigzag, okay, which was actually a very clear 5 wave structure, and then we're expecting an ABC correction before we see another 5 wave structure. Okay, that is a zigzag. A zigzag is a 5 3 5 correction. Okay, so if we look at this correction, the ABC, the second leg of the zigzag, very carefully, we could see that the first leg has already been formed, okay, with this 5 wave structure. Okay, this one here that we saw a correction here. Let me increase this. Okay, all right, so this is good. So we saw the first wave here, the first leg of the correction, and then the second leg here, and then the third leg, it's looking like it's projected to be an ending diagonal. So we could see that the first leg has been formed, which is a 3 wave, another 3 wave, okay, and then the diagonal is usually made up of 3 different waves, okay, that are shrinking, that are converging, just like this. So we're expecting 3 3 3 3 3, which is going to be completed around here. And now looking at these levels, the 61.8% extension of wave A from B is around here. Okay, we also have the 61.8% okay, extension, and this one is the 61.8% retracement of this A leg. Okay, so this 61.8% and this one, so the kind of a convergence of Fibonacci level here. Okay, apart from that, we can also use the Fibonacci time ratio to see where, or when price is expected to turn up. Okay, where we expect any pattern that is going to be formed here, when we expect it to be completed, and then price will be expected to move in the direction that it should. So this is our Fibonacci time. So first of all, go with the Fibonacci time retracement of this, the A leg. Okay, all right, so it's here, the A leg. All right, so this is the this is 2. That means the 100% extension of here. That means that retracement. That means that at this level, wave B is going to take exactly the same time that it took wave A to be completed. Okay, so which is a very nice time ratio. Okay, and if we also look at the Fibonacci time extension, okay, right here of wave A, this particular one, wave A. Okay, now from B, all right, so it's also around this this level. Yeah, let's look at the level we are looking at. We're looking at the we're looking at the 1.618% extension, which is here, and the 2.618, all right, extension of those levels. So which means that 61.8% of the time that it took this one to be formed, okay, it's around here, and then 1.618% of that same time it's around there. So that means if price returns around there, okay, it took about 61.8% of this time, of the time that it took this one to be formed, and if it returns around there, that means about 1.618%. So which is a very nice level to watch out for. Okay, there are also some other levels to one can look out for, but these two levels, okay, we can also use the 2.0. okay, so these levels are very beautiful levels to watch out for, right? So we're going to be expecting the retracement, the ending diagonal to complete around there, and then for price to then shoot up. Okay, so that is it about the GBP. Yeah, so if we can see an ending diagonal ending here, so this level is such a very beautiful level, level of convergence, price and time convergence using the Fibonacci ratio. So we're going to be expecting an ending diagonal to be formed around this level, okay, and then price is not expected to move up. So if price moves otherwise, then we're going to look at it in another way. So this is just a forecast, and then we're expecting price to play to it before we take any action. All right, so that is GBP yen. Okay, so GBP yen is expected to dip, and then before a rally, okay, the final rally up here. Okay, so the same. So let's go to the GU now. So this is the GU, the cable, and at this level the third wave completed, and we saw price moving up throughout this month. We saw price projecting upward close to this fourth subwave of the third wave, and this could actually be an ABC formation. Okay, but the time, okay, the time factor from here to here, okay, does not actually look comfortable with us. So that's why we want to see this as like this, that the fourth wave is about to be formed. It's about to be completed. We are only, the move from here is the first leg of the correction, and then the second leg of the correction is what we are expecting to end here. Okay, and then the third leg of the correction is going to be around there. So the second leg is actually going to be an expanded flat, okay, an ABC expanded flat, which could end somewhere around here, to break below this level. So we're expected to break below this level. So that means that the GU can dip further, okay, when the market opens next week, and then next week and coming weeks we could see GU moving up, okay, to complete the last leg of the correction before it starts moving down. Okay, so now what we're going to do now is to look at the B leg of this flat and see if it's going to give us a good five wave structure, 5-wave impulse wave. So we can check that from the 15-minute chart. Okay, now from the 15-minute chart here, we could actually label this as wave 1, wave 2, wave 3, and then wave 4, and then we could actually be expecting a fifth wave move around here. So this is the projection of the GBPU, and here a B, and then a C wave. So if price could actually dip further to break below this level and then returns, okay, to break above here, then that's going to be a good buying opportunity to take price to, higher, to somewhere around there 1.46 1.465 level. So that is it about the GU. All right, now the next one we're going to be looking at is the Euro Canadian dollar. The Euro Canadian dollar is giving us something that looks so interesting. Let's start from the 4-hour chart. Okay, so from the 4-hour chart, we could see a move from there, 1 2 3, and then we are in the fourth wave. Okay, so we're in the fourth wave. So they move from here. This is wave 1, wave 2, and we could see the third wave here. So after this third wave, what we are expecting is this fourth wave that we are seeing around here, and that this fourth wave is looking like a triangle, though it's still forming. Okay, it's still forming. This is A, B, C, D, E. So that means that we could, once this triangle completes, then we could be expecting the E-card to go down in the direction of the trade for the last time before we could now see a move upward, and the target is going to be around 1.3966. so this is a forecast. If this forecast does not complete, then the viability of this analysis will be lost. Okay, but if this forecast completes this way, then this analysis is going to be well held, and then price will be expected to dip, okay, to around here before we could see a correction, okay, upside. The same thing goes with Canadian dollars HF. Canadian dollar HF. Let's go to the 1-hour chart. Actually, the 1-hour chart. Okay, so the same thing goes with this. We're also expecting a triangle as the fourth wave. Okay, from here we're seeing an A, B, C correction, and then the C leg of this correction has completed the first 3 waves, wave 1, wave 2, wave 3, and then the fourth wave is in motion. Then an A, B, C, D, E. Okay, and we can see the channel move. So once this triangle completes, okay, around there, okay, maintaining this structure just like this, okay, we'll be expecting a move up. So we don't expect price to break below this level, that's 0.730. We don't expect market price to break below 0.73. so if this structure is maintained, this triangle structure is maintained, then we could see CAD curve moving up to 0.76 to 0.77 price level. So this is also a forecast. Okay, if this happens, then we could be on a good side to place a buy holder. Okay, likewise, New Zealand Canadian dollar is also forming what looks like a triangle pattern, and this one is actually expected to be a double zigzag. Okay, this is the first leg of the zigzag, the second leg, the third leg. So this is the third leg. Okay, it's actually a triple zigzag. Yes, a triple zigzag, because the first leg of the zigzag is there, the retracement WX, the second leg, the second zigzag retracement. So we're expecting the third zigzag. Okay, and we could see the first leg of the third, and then the second leg of the third is giving us a triangle. So at this point now, we could see price moving up, moving down rather, okay, to somewhere around there. Okay, so in the coming weeks, we are expecting the New Zealand Canadian dollar to dip, okay, to go really below, down before we could see a major movement upside, because at this level, if price actually moves this way, then a triple zigzag will have completed, and price will be expected to go upside. Well, these are the projected levels for that. And we can also check the next one. We could check at the Euro GBP and then the Euro Yen. Okay, let's check the US dollar Japanese Yen. The US dollar Japanese Yen, we had a forecast that price is going to dip from here. That was this week. After this triangle, we put a sell order around there, which is the completion of the triangle, and we did very well. And then after the break of this triangle, we're expecting a 5 wave move downward to complete the 5th wave, and then we labeled this as wave 1, wave 2, wave 3, and then we saw a zigzag here, and the price flashed, and we're expecting a dip, okay, to go below here, but price in the other way moved up, okay, giving us what may be a double zigzag pattern. So this particular level in price and in time have been forecasted, okay, this particular level here, okay, in price and in time has been forecasted for the return. Even right from here, we've already forecasted this particular level, okay. You can see this rectangle here, and then this rectangle also, both the vertical and the horizontal. Okay, the vertical is the time, okay, while the horizontal is the price level. So converging around there means that you could see UJ, okay, dipping below here and then moving down in real time. Okay, so it could though the price is going upward, but there could still be an opportunity for price to resume downward, okay, and then before we could actually be looking for a position upside. But right now we'll be expecting UJ to move downward. Okay, let's try to plot a channel line and see how that's actually been okay, from here. All right, okay, so if price could break below the channel line, okay, a break below this channel line will prove will give us more confidence of the bearishness of the UJ, which could actually take below here. So there's an ABC structure, you know, take below this level. So if price could break below the channel line here, this particular level that we've also highlighted, and then that means that the UJ could be moving downside in the coming weeks, right? So that is it about the UJ. And now we're going to look at the Australian dollar, New Zealand dollar, Australian dollar, US dollar now. Though since we expect the UJ to move downward, that means that the US dollar could also move up, coupled with the fact that we have a bullish projection for GBP US dollar. This showing that the US dollar could weaken about against major currency pairs in the coming weeks. Though the weakness the weakness has already been seen in GU since the beginning of this month, and even EU in the beginning of the month. So we're going to be expecting the weakness to continue in the coming weeks. All right, this is the Australian dollar and US dollar. Let's start from the 1 hour chart, and then we could see that don't mind all these different lines. Right, let me remove these lines. All right, so the most important thing here is to look at the wave structure. Okay, so from the labeling, let me take you actually to the daily chart or to the 4-hour chart so that you can see the long-term Elliott Wave very well. Okay, now we move on to the daily chart. And zoom in, and then all right. Oh, actually I didn't label this very well, but I would still show you. This is wave 1, and then wave 2, so a wave 3 downward, a wave 1. What we are seeing here is the last wave. Okay, so at this moment, okay, let me actually label it. The first wave, and the second wave, and I've seen the third wave, the 4th wave, and then the 5th wave. Okay, so that should be okay, let me give us something good that's minute. Okay, so this is a 5 wave structure, and look at the third wave. Is wave 1, wave 2, wave 3, wave 4, wave 5. Wave 4 flashed a bit around here, but immediately went down, so it can still be accepted wave 4, and then we could see the wave 5. And then the fifth wave here, in the fifth wave, we could see that the first wave was actually extended, the second wave, the third wave, the fourth wave, and the fifth wave actually ended here. And what happened? Price moved up. Okay, so we're expecting the A wave right now. Okay, the wave A wave to be completed. That is what we are looking at. The impulse wave, the long-term impulse wave, which started in 2011, has already ended here. So we're expecting an ABC correction, and this ABC correction is going to be a deep one because it's expected to be a second wave. So it's not a fourth wave, a second wave. So it's going to go deep about 61.8%. So let's look at the first leg of this correction, because that is what where we are at the moment. So this is the first leg of the correction. Okay, this is wave 1, wave 2, and we could see wave 3 around here. So these are the subwave of the wave 3. 1, 2, 3, 4, and 5. So this is wave 1, wave 2, wave 3, and so what we are seeing right now is the fourth wave. Okay, this is ABC. Now look at the projected level. Okay, around here is our projected level. This is the fourth wave. Okay, usually when the fourth wave is coming down, it comes to the fourth subwave of the third wave. Okay, so it's coming to the, so this is the fourth subwave of the third wave, and these are the levels projected: 61.3% projection of A from B, and this is a 38.2 retracement of the whole of wave 3, and so this level is a very reliable level to look out for. So price could dip, okay, around here before we could now see a move up. Okay, even time projections and retracement also give us a kind of go ahead, I mean a kind of more assurance that price could reverse around here. So a deep down here, okay, before we now see a move upside. Okay, so and then the level to watch out for is around here. Okay, so it's going to be expected to go above this level. So if price could dip to this region, then we'll be expecting a move upside. Even looking at this counter trend line, so there are a lot of levels around here to watch out for, with 4, Fibonacci, and even the counter trend line. So we're going to be looking at this very closely. Okay, so next week, in the coming weeks, we'll be expecting Australian dollar, US dollar to move upside. Okay, just like the UJ is going to go downside, the GU is going to move upside. So that shows that in the coming weeks, US dollar may get weakened against the major currencies. All right, so let's look at the Euro Japanese yen. The Euro Japanese yen is actually giving us what looks like a double zigzag. Okay, we saw the end of a particular move here. Okay, this is the third wave, this is the fourth wave, and then this could be the fifth wave or the first wave of the fifth wave. Actually, I labeled it as the first wave of the fifth wave, okay, because of the long-term wave count that I did. So I'm expecting this to be the fourth wave of the first wave of the fifth wave. Okay, and now this looks like a double zigzag. There's an ABC correction here, price dipped, and then we'll also be expecting an ABC correction around there. So price could rally here before we'll now be expecting a sell. So this is where the double zigzag is going to be, is expected to complete. Okay, expect the double zigzag to complete around here. It is only when we see this is also a forecast, so when we see this complete around there, then we'll be waiting for a dip down. So let's see when it's likely going to, when it's likely going to take from here down to this could actually take like 8 days, 9 days, 7 to 7, 8, 9, 10 days, and that's maybe about a week or two. We'll be expecting Euro yen to rally before we now sell the rally. Okay, so the Euro GBP is also looking like that. We've been following Euro GBP for a while now, and this is our new forecast. Okay, we saw after the end of a long-term move upside, we thought I mean, looking at this level here, 1 2 3 4 5 was an ending diagonal, and then we expected price to dip further, though price dipped, but it did not dip very well, and now it's rallying up. So we now label this one, I mean the ending diagonal, the one we labeled as ending diagonal before, as the first leg of a new ending diagonal. So Euro GBP may move this way, okay, but one thing that we know is this, we want to believe is this: Euro GBP is already overbought, so we'll be expecting a real move downside, okay, in very soon. We're gonna be seeing that very soon. That's what we're expecting. So but right now, this is what we want to see: 1 2 3 4 5 ending diagonal, because we don't expect this the 50 has already been extended so much. Because look at the other wave, wave 1, wave 2, wave 3, wave 4. So the 50 has already been extended, seriously extended. So we're going to be expecting it to end with an ending diagonal 1 2 3 4 5, okay, before we now see a dip. So how long may this take? This may take this one to here may take 17 days, and then from here to here may take maybe 4 days, so like around that 21 days, okay, around that 21, that's about 3 weeks time. So in 3 weeks time we could see Euro GBP completing. If Euro GBP is going to move this way, I mean an ending diagonal, that should take about maybe 2-3 weeks, okay, before we will see the end of this. Okay, it may not, the diagonal may not be this long, okay, it may be something smaller. So when price is moving, we'll be following it closely, and then from there we'll know what we want to do next. So these are some of the clearest pattern I could actually forecast. Okay, if I see any other one, I'm going to share it with you. All right, thank you very much for following. This is Sanmi Adeagbo. I will see you soon. Bye.